Well, good afternoon now, folks, as we head into US trade on Tuesday, the 5th of September. Now, we'll have a look across markets and see what is going on. And really, it's a similar picture to this morning. We spoke about China, we spoke about Australia, obviously causing a bit of downbeat sentiment as we headed into European trade today. Now we were looking at European economic data, hopefully to continue to be negative or to post lower than consensus figures. Hopefully get the US dollar trade to continue. Now we were looking at US dollar strength continuing pre-European Open, and that has thankfully come to fruition over the course of today's European session. Now we'll have a flick across. I mean, the headlines really similar to what we were looking at this morning. Not a massive amount of fresh headlines out over the course of today's European session so far. But we'll have a look across the grid and we'll jump across then over to the calendar where we can see US equity futures relatively mixed. European equity futures higher, Asia Pacific equity futures relatively mixed, but the Hang Seng was down a couple of percent and now is back up to a 0.5% gain. So a bit of a bounce back across stock indexes. Now we'll get on to as to the reasons why now in a minute, but US yields and global yields for that matter are higher across the board. And no clear fresh driver of those yields pushing higher, but as we can see, global yields higher across the board, and especially those US dollar yields, those US yields, which continue to put upside pressure on the US dollar, which obviously that European data is a contributing factor to that in this morning's session. But the Aussie lower across the board, Kiwi lower across the board for reasons that we have mentioned earlier on in today's earlier video, but much of the same across commodities, bonds, and FX, where the difference is equity futures having a bounce back across the board after we looked at this economic data filtered through this morning. Now we were looking pre-European Open for this data to come in negative, right? If this data comes in negative for the euro, negative for the euro can also help to propel the US dollar higher as there are large they do a lot of trade with each other. Naturally, a weaker euro is a bit positive for the US dollar. I mean, it's not a main driver of US dollar strength or US dollar weakness, but the fact that we had broad-based US dollar strength already, we were looking for ways we could get that to continue. And these data prints coming in lower than anticipated were in fact ways that it could continue. And that did in fact play out, which we'll have a look at once we get around to in a minute. Now, where it gets difficult for stocks, for example, is you can see stocks have all bounced back across the board. Now that weak European data is a bit trickier to manage when it comes to stocks, as on face value a slowing economy or a struggling economy is negative for business, it's negative for growth, it's negative for the economy, which in turn is negative for the stock market. Where it gets tricky though is you see a spike lower across these candlesticks back here. That's the 8-9 o'clock candle, which pushed lower initially and then pushed back higher again. Now negative for business conditions, weak figures. Okay, that's pretty simple to work out, but when we're in the situation where the ECB is approaching the end of their hiking cycle, weak economic data means they will have a reluctance to continue to hike interest rates, which is then as a positive for stocks. So you kind of got to view that as a bit of a football match, really. Like one team goes 1-0 up, the other team equalizes, goes 1-1. That's how it's kind of finished up. But markets have had a pretty strong, solid bounce back of expectations for the ECB not to continue hiking interest rates. Now, come across this, you have a look at the S&P and Dow Jones, the Nasdaq, the Russell, all having a bit of a pop higher. You can see the DAX, the Euro stock, and the FTSE especially all having a bit of a pop higher. Do need to wait and see how the US open up in about 20 minutes, half an hour's time, and we will see how we're going to have to see how markets react on the US's first proper day of trading so far this week. You can see the chart we're looking at here, euro dollar. That is the 8 o'clock candle there, and we kept pushing lower then post those data releases, which did continue that dollar strength across the board, where you can see the Australian dollar, Kiwi dollar, euro, and sterling all pushing lower. You can see dollar Swiss, dollar CAD, dollar yen all pushing higher, although dollar CAD has reversed all of its gains so far in this candle, which is only like 10 minutes 10 minutes old. You can see a big spike higher in oil. We'll have to figure that one out. Give me a second. I mean, clearly something fundamentally is just after happening. Is big move in the space of 10 minutes. What's it? Um, yeah, up a couple of percent in the space of 10 minutes. Uh, Russia extends oil export cuts of 300,000 barrels per day until year end, and Saudi Arabia will extend the voluntary cut of 1 million barrels per day until for 3 months, and to include October until the end of December 2023. So Russia and Saudi Arabia continuing with their cuts to production of oil, right? That reduces the supply of oil and then pushes this price higher, and that is likely to be positive for the price of oil going further. We had a bit of a pullback, but in the pullback, I'd say it's been bought, but you got fresh headlines out. Clearly, Russia, Saudi Arabia wanting to push the price of oil higher and extending, I mean, one's production cut, one's export cut. But either way, it doesn't really matter what way you try and look at it. Either way, the reducing supply of oil, reduced supply of a currency or a commodity or anything for that matter, increases the price of it, and that you would have to imagine is likely to continue over the short to medium term on the price of oil. So that is developments over the course of this video. Oil pops higher, production cuts continued from Saudi Arabia and Russia, which have been a large driver of this move higher, which started back in June, really. June, July has continued on, and that looks set to continue as output cuts have been extended, right? And that is fresh news in today's session. So that kind of takes my eyes off the rest of everything else, keeps my eyes on oil. I hope for further oil upside in today's session off the back of that. Probably would. Would I want to buy it at these highs though? Possibly not. You can get down in your lower time frames if you want. Try to buy something down on a 1 minute chart. Pretty risky trade, but if you wanted to get long some oil from here, you could enter something like that. Could get a stop loss below there and hope to target somewhere up there. But it's not the best of risk reward ratio. So as your stop loss, get a bit more of a pullback. Maybe watch it back down 86.50 or 86.70, something like that. If you could enter back there, massively increase your risk reward ratio, which would be nice on a move higher. But you have to favor oil upside off the back of that in the coming sessions ahead. So I say positive developments in the price of oil. It's positive for the price of oil. Maybe it's not positive for people who want to purchase it, but bullish for the price of oil over the course of this video. Fresh developments: Saudi Arabia and Russia extend cuts on oil production.